This is a demonstration of exercises 325 and 326. Exercise 325 states that it is journalizing, adjusting entries, and posting to T accounts. So we are given the unadjusted trial balance for all Mopped Up Company, a cleaning service, as of December 31st, 2024, and the problem gives us the debit and the credit balances for all of the accounts. It also gives us information about adjusting entries for all Mopped Up for the 12 months ended December 31st, 2024. The problem first asks us in part 1 to open a T account for each account using the unadjusted balances. So I have already opened an account, a T account, for every one of the accounts listed in the unadjusted trial balance, so that we will have those ready to complete the part 2 of the problem, which is to journalize the adjusting entries using the letter and December 31st date in the date column. And then the third portion is to post the adjustments to the T accounts with each adjustment by letter and show each account's adjusted balance. So now we are going to make the adjusting entries, and as we make these entries, the posting will be done automatically by Excel to the T accounts, and the balance is updated, and we will look at that. So our first adjusting entry states that we used office supplies of $1,700. So we know that we had an asset of office supplies, and now we're adjusting it for the supplies that we've used. So our debit would be to supplies expense and our credit to office supplies. The B part states that we use prepaid insurance of $580. So we bought the insurance, and now time has elapsed and we've used $580 worth, so we would debit insurance expense and credit the asset prepaid insurance. The C portion states that we depreciated equipment of $500. So for that entry, we would debit depreciation expense equipment for $500, and we would credit accumulated depreciation equipment for the same amount. The D part states that we accrued salaries expense of $310 that hasn't been paid yet. So that means that we would debit salaries expense for $310, and we would credit salaries payable, a liability for that amount. The E portion states that we earned $400 of unearned revenue. So we would have had a liability of unearned revenue, and now we've earned $400, so we would debit the liability and we would credit service revenue for the same amount. As we have been making the adjusting entries, the T accounts have been updated, such as supplies, office supplies, and prepaid insurance, and our new balances have been being calculated for each of the adjusting entries. Now we are going to do exercise 326. In this exercise, we are going to refer back to the data that we had for exercise 325, our T accounts, and we're going to prepare now an adjusted trial balance. So all of our T accounts have been updated based on the adjusting entries, and now we're going to see whether we're in balance. So we just go to the T accounts that we've got already updated, and we're going to put in each one of the balances for each of these accounts. Cash is $800, office supplies was $300, prepaid insurance is now $20, and notice we're watching our debits and credits. Our equipment account is a $30,000 debit, and be careful when you get to accumulated depreciation, that's going to be a credit balance. Those are all of our assets, so now we're going to go and record our liabilities. Our first liability is accounts payable, $2,400. And that's a credit balance. We now have a balance in salaries payable of $310. Our unearned revenue after making the adjustment is now $300. Common stock is $15,300. Dividends will go back to a debit of $5,000, and now we will start recording our revenues and expenses. So service revenue has an adjusted balance of $25,400. And now we'll record our expenses. So our salaries expense is adjusted to $7,310. Our supplies expense now has a $1,700 balance. Our depreciation expense has a balance of $500. And our insurance expense has a balance of $580. And we can see that our debits and our credits equal $46,210. So that is how we check to make sure that first of all, we knew our balances were okay from our unadjusted trial balance, but what we're trying to check is when we did our adjusting entries, did we post those correctly? And that is the conclusion of the demonstration for exercises 325 and 326.